last week was interesting with QQQ. As you can see here, the NASDAQ. So here's the 30-day chart. This nice drop down right here. And what this nice drop down does is it gives you an opportunity to sell premium. So here is the chart on Thinkorswim. Okay, that I still use to help teach and just explain stuff, because usually I don't need it. Usually I just look at this number right here. Okay, this is IV rank, and it got way above 35, as you can see when it dropped like this. But to visually see this number, I like to look for anything above 35, and here's why. These are the charts with everything on it. As you can see, it went red here. Hasn't gone red here yet. If it goes red here, this is going to go further down, and you're going to see this is IV rank. See that spike right here? I'll zoom in just a little bit. Look, it went from 14.5 to 51 in 1 day. All right, and that's when you want to start selling premium, because if you do a golden gecko now, you want it to stay within a 1 standard deviation range. All right, and if it goes further down, this will go higher. But as you can see, look how long it stayed at 50 1 day. Okay, it's still going down today. Right now, it could go. The stock could go up a little bit like this, like here, maybe 2 days up here, and then crash down again. So it could come up to here, it could bounce, and it could just come down here. But the reason why I love selling premium like this is that's when you can this is when you sell something to the other people, the people buying from you are willing to pay above sticker price. So here's what I mean. Like, let's say, wait, hold on, let me load just the IV rank. Okay, look. So see when IV rank pops up like this and you sell premium, when you do your golden geckos and you sell options when IV rank is high. This is like when you go to a car dealership and you go to the window sticker and you see, manufacturer suggested retail price, is one price, and then there's that little sticker called an addendum, and the dealer marks it up above MSRP. Well, do you want to pay above MSRP? No, right? But guess what? When IV rank is up like this, okay, those prices get overinflated, and the ones you're selling, people are actually more than willing to pay above retail or above that sticker price. Okay, so you're going to sell them when it's high, and you're going to buy when it's low. Look, you sell it to these people when they're willing to buy above retail, and then you buy it back when you sell high and you buy low. Okay, and that's how you make even more money, because you're allowed to, not only are you allowed to sell with a high probability chance of being correct, you're also selling it for more money. So when you see on your Tastyworks account, okay, and you do something like QQQ and you do a golden gecko, okay, like this, these puts that are 1 standard deviation are close to 84% out of the money, because IV rank is so much. Can I get? Yeah, that's as close as we get anyway. I'll just clear it and do it again. So again, just go to strategies, go to this, and kind of make sure these are set right, like that. Hit go, and then you will see. I'll zoom out a little bit. You want these to be close to 80. This you want to be at the 2% line, like that. Oops. There you go. Click. Okay, so you want to be close to this 2 standard deviation line as you can, like that. Well, it's at 3%, but anyway. Okay, so pretty close. So as you can see, this 1 standard deviation line, when you sell something, you're going to sell it for what's its bid, and when you buy it back, you're going to sell it. You're going to buy it back for the ask. So right now, look, with IV rank, but look, it already dropped from 42 to 39. As this number drops, the amount, this bid price here drops. Okay, or it's not as expensive. I mean, you can't collect as much. But when it was at 50, when IV rank was at 50, you could sell these for more money. Okay, and therefore you can also collect more money. Look, you have an 89% chance of making at least a 50% of your max profit. Um, this is a great return on risk as well. So I wanted to talk to you guys about that real quick because in real time or really current, you can see what I look at. And now I don't trade, disclaimer, I do not trade exactly this way. The way I trade is much more profitable, but this is real basic for if you're just new, and that's what I do these YouTube sites for anyway, for people who are new. You want to start off with a good foundation. When I do my private coaching calls and for my private clients, I teach them something a little bit different that which just one tweak makes their profitability a lot higher. So, but this is what I look at. And now, if you want these charts, by the way, you can just please hit like at the bottom and subscribe. Send me an email or message, and I'll get you my custom charts. I'll get you this one as well as all of them, which looks like this is from here. These are all of them I use. Okay, so again, how I look at it is when this goes red, when my OBV cross goes red and this goes red, it signals a downturn. If they both go green, upturn. I love this one though because it tells me buying volume. More if there are more buyers and sellers, or more sellers and buyers. Right now, of course, this is showing red, so there are more sellers and buyers. It's a bearish trend. Okay. And these are traditional slow stochastics a lot of people use. See, when this red line crosses above this yellow line, it should cross up. And there's values here, right? So as you can see, look at these numbers. You want the red number lower than the yellow number if you want it to go down. Once the red number is greater, the red number is greater than the yellow number, it supposedly means the market's going up. So right now, as you can see, it's still below, but real close, if not close to crossing. And of course, this is your IV rank. And then I'll zoom out and you can see, I used to use this back in the day. Now I just use this just for teaching and just to put stuff in context, you know. If you want, you can look at like time periods like this. See, it goes red here. This stays red, and this turned red, and it went down, but it didn't go down very far. All right, and then this started to turn up. So that's what happened. So yeah, red here, downward trend. See, and you can kind of take a look. That's what I use it for. But honestly, that's if you're trying to day trade and whatnot. And I just made so much more money, a lot more predictable, a lot more consistent once I started selling options instead of trying to day trade like everyone else does. I found out really quickly if you're doing what everyone else is doing, you're probably not making any money. So I tried not to do what the masses are doing. All right, hope that helps. I'm trying to think. Oh, hold on. Let me look at the rest of this stuff. Here's SPY. Look, IV rank 3. Here's DIA. If you're wondering why I'm quiet, because well, one, I get kind of busy, and two, it gets kind of boring when IV rank. So that's why I was super happy last week that QQQ is still in play. All right, hope that helps. You guys have a great day. Talk to you guys later.